Let's now talk about the Ask Weekend Investing round queries and their solutions. So let's see what the questions are today. So we have answered 759 queries till date, for 46 such rounds before. All of them are available for your viewing and understanding. You can see the description for those queries that have been resolved. If we and of course, please like and share these videos. Do subscribe to the channel. I think that is a must if you are a regular viewer of this channel. And in case you are regularly viewing but not subscribing, do let us know why you would not want to subscribe. This channel is never going paid, so don't worry about that on that front. Question 760 from Sahil. Love your work and the clarity in your momentum framework. Thank you. Quick question. Do your strategies exclude ASM, GSM listed stocks, or can flagged stocks still qualify momentum strong? So good question, Sahil. The amount of stocks, the number of stocks in ASM, GSM lists are so long sometimes that you don't want to avoid the entire market. And ASM, GSM is less to do with the quality of the stock, more to do with the recent performance of the stock. So good quality stocks also go into ASM, GSM listed stocks sometimes. And we basically keep a volume filter check on such stocks. So if a stock is going into ASM, GSM, we will still check for whether the volumes are decent enough. But just because they've gone into that category, they will not be removed from our potential filter. If the momentum is there, if the volumes are there, we will still go for it. I hope that answered. Sarup has the next one. If my capital is 25 lakhs, which weekend investing product should I invest if my time horizon is 25 years? So I think any of the weekend investing strategies will do. Uh, you could look at Evergreen, you could look at NNF10, you could also look at HNI strategies if you plan to build up on that capital gradually as it grows. So I think any of them will do. There is no really any cap in any strategy right now which will not absorb 25 lakhs. Srikar says, can you share your personal experience of the dot-com crisis? Okay. I think it was like a ride which is difficult to reimagine. I don't think we ever got a ride like that post that. Also because only specific segment of the market was running. So IT stocks, telecom stocks, and related stocks were running. The rest of the market was very normal. And hence, if you were, not allocated to those sectors, you actually missed that entire thing. Or if you were only playing momentum, and at that time I wasn't doing momentum investing, I was doing more, trying to do more of the conventional mindset. And of course, as it happens, as soon as that rally took off, all those stocks that were taking off became, beyond the conventional acceptance of value. Why will I buy a Himachal futuristic at 200 rupees? It has really, it did not have any earnings of even 5 rupees, and then from 200 it went to 3,500. Or why, a stock like Pentafor or Silverline or Rolta, many such names which probably the younger generation has never heard of, they were all flying. So some trading benefits happened, yes, I remember, but I think significant part of the gains were lost when the markets came down because there was no exit plan, and people were stuck in stocks that were, just going circuit to circuit once it collapsed. So it was a good learning, I would say. uh, Experiencing that probably in my mind did gear myself up towards momentum investing at a later stage. But yes, I would have liked if I had done better in the investing in that period, but I didn't actually. So um, I think the 2008 fall was more debilitating for me because, again, I was riding a lot of stocks which virtually came back down and I could not exit. And I think after these two, some money was made, but not any big money was not made. And I think after these two experiences, I was very sure that I don't want to be in a discretionary methodology of investing because you get stuck. And maybe it is just me that I don't have the mindset to uh, execute some fantastic trades when I'm in stress. So I think each person is built very differently, and I am more of a rule follower than a sort of a person who can really think out of the box, perhaps, and pull a rabbit out of the hat. So that skill I did not have, and realizing that uh, I don't have that skill, and I had done a lot of trading between 2000 and 2008, like BTST trading or short swing trading, those kind of things. And I realized that using rules and using setups, I was faring much better than doing ad hoc discretionary methods. So that's how it all culminated towards non-discretionary momentum investing for me. I hope that will give you some color. Divya says, is it true that strategies based on larger time frames don't require a review of their basic rules as against smaller time frame strategies? No, that is not true. All time frames, if they are non-discretionary strategies, will require a review. Um, the smaller time frame strategies will require frequent reviews. The longer time frame strategies will require lesser frequent reviews, but yes, reviews will be required. Otherwise, they become buy and hold forever, and some stocks will do very well in buy and hold forever. Some stocks will go to zero. How and when you will decide to move out of them is will then remain a question. So maybe like if you bought 20 stocks, let's say you were in 1996 when I started my journey, and I looked at Sensex 30 stocks, and I invested 3% each, 3.3% each in all of those 30 stocks, and I just left them for 20 years. Perhaps some 10-12% return perhaps may have come because several of them would have died, several of them would have done well, and your involvement would not have been there at all. So in my view, anything which you are reviewing beyond, let's say, a monthly time frame becomes a longer view. It's not that you're changing everything every month, but when you're looking on a monthly time frame, you're looking at longer trends, which span over few quarters. That for me is long term. But yes, some people may consider anything that you don't touch for 5 years or more is only long term. So the also the dependency is on the type of the stock that you are trading. So if you are, let's say, looking at small cap stocks, and if you are like most other momentum ETFs, momentum indices are built on 6 monthly review or 6 monthly rebalance. In 6 months, small caps will go from here to there and there to here. So the ability of the strategy to react to changing trends is important. Yes, there is a give back in terms of higher chance or higher cost, but that is a sort of a uh, give and take that you have to arrive at a proper balance at. So in our strategies, for instance, we have many large cap strategies which may do only once a month, but then there are smaller cap strategies which cannot wait for even that month. They needs a weekly time frame. I hope I could have answered some of it. Haim says, how to choose a financial advisor who has same level of knowledge on momentum style of investing. Do you use a financial advisor? So I don't use a financial advisor, and that's not a good thing. Um, Ideally, one should use a financial advisor because at least you get a unbiased advice from somebody else. I just try to keep things very very simple. Um, Financial advisors usually will have you allocate money across 3, 4, 5 asset classes. So I just keep it very simple: real estate, equity, gold. That's all, and I try to rebalance them every once in a while, maybe once a year or so. And I'm just very simplistic in the approach, so I don't think any financial advisor uh, is needed, and that is my bias against that, because my needs are best understood by me. But yes, if you are not in the field as a professional or as not have the relevant experience, then perhaps some external help will certainly help. Uh, uh, Momentum investing specific knowledge financial advisor having is difficult because conventionally momentum investing is not seen to be a like a core investing style. But I think since 2016, when weekend investing started, it has become very, very popular. And I'm hoping that financial advisors do advise. And of course, we have seen over the years, even mutual funds and ETFs have been launched on momentum style of investing. So people are realizing gradually that over a longer period of time, it does serve some purpose. And I think yeah, if you were to educate yourself well, you perhaps may not need a financial advisor. But maybe in your initial days, while you are learning yourself, you can use services of some. Yeah. Abhijit has the next one. Can we have a MI20 kind of strategy based on micro cap 250 index, which may be with a stronger 30% gold allocation for downward protection? So it's a good question, and it could be a good strategy, but perhaps it can be done on an individual basis rather than on a group basis, because all these stocks in the micro cap region, some of them have very poor liquidity. So to do a large number of people riding that kind of a strategy, we require a lot of depth in these stocks. So I can tell you, like, if you go to the 700th or 750th stock in the list of NSE, it will go down to as low as 1 or 2 crores of trading per day in terms of the value of trade. So that cannot support even a few number of portfolios. So this is the big challenge in terms of our markets, that the liquidity is concentrated in the top 200, 300 stocks, maximum around 500. But yes, a strategy if built for yourself perhaps can work very well. Chandrasekhar has the next one. This has been a recurring question from my side. How do I allocate a lump sum at the start of a small case? If a market is in correction, do I bring all my capital in? If a market is near highs, do I wait or stagger my capital across what time frame? I understand there cannot be one size fits all answer, but some direction will help. So let's say you were to allocate to some small cap portfolios right now. Most of the small cap portfolios have not really done very well in the last 1 year. So they are basically going through some kind of a time correction and so on and so forth. In such a case, you could bring some lump sums into the market. If the market is in any correction, market or the small cases are in any correction of 10-15% kind of range, you can bring larger money in. If the market is hitting near highs, and it depends upon if it is hitting new highs since a while, or has it just started to hit new highs. If it is just starting to hit new highs, perhaps there also you can bring larger sums in, because that may be a start of a long rally ahead. But it's as you rightly said, one size will not fit all, so it's very difficult to comment on, because each break of a rally, each break of a market rally could be different. But my sense is, if the market has been heated for some time, don't bring in lump sums. If the market has been in correction, you can bring in lump sums. If the market is hitting new highs but has not yet been in uptrend for long period of time, there also you can try to bring lump sums, and you can stagger your capital over a year, year and a half perhaps. If the market has been running along, then you can stagger it out. I hope some answer is there for you. Pankaj says, if I begin with MI Evergreen and reach capital of 40 lakhs, then can I shift to capital compounder? Yes, of course you can shift, and we will help you shift that. What will I gain and what will I miss out when you compare the two strategies? So HNI capital compounder basically will also look at huge depth in those stocks, because as you go up in terms of the value, MI Evergreen will not invest in stocks which are uh, let's say of larger price point. So any stock, let's say, which is 20,000 rupees, MI Evergreen will ignore that, because otherwise the minimum capital requirement for MI Evergreen goes up very hard. Or the depth of the stock. So if when your capital goes beyond the recommended capital, we advise the recommended capital exactly for that point, that collectively we should not exceed such amounts where it starts to create slippages for everybody, because everybody's performance goes bad then. So that's where we will recommend that you move over to a capital compounder, where more filters are there for in-depth capital. And but if you want to sustain the element of gold and not yet breached the recommended figure, you can stay with evergreen also. So and the other impact that you will see is that MI evergreen is more slower, in terms of reaction because it's a monthly reviewed strategy, whereas the review on the capital compounder is on a weekly basis. Hatinder Singh says, in any weekend investing weekly rebalance strategies, do we also need to keep a specific stock stop loss so as to avoid any violent variation during the week? So no, you don't have to do it. The strategy is supposed to take care of all that. If a stock is going to get meaningfully weak during the week, we can also have a intra-week rebalance. We can announce that and do that. So you don't have to keep additional stops beyond the rebalances. Shaukat Ali says, is it safe to assume that MI Evergreen can handle sharp falls considering it is monthly rebalanced? So let's say market drops 40% in 2 days, or the Nifty drops 20% in 2 days and stocks drop 40% in 2 days. The strategy will go down 40% probably. So depending upon how the structure of the market is, no strategy can prevent a a collapse if it is a a calamity hit market. Iran nukes Israel tomorrow. I mean, there is three circuits in the market for next 3 days. So don't think about those scenarios because no strategy, no nothing can handle that, right? It's like a 25 sigma event. So, but yes, I mean, it has been thoroughly tested over the last, and you also have in MI Evergreen a exposure to gold. So hopefully gold will go up dramatically if that kind of a eventuality happens. And all the tests that have been done over it over significant periods of time have proven that that kind of a normal market fall has been absorbed. But yes, I mean, nobody can really say about tomorrow. Thank you so much for your questions. We've come to the end of this round. Do keep asking your queries. If you have asked your query and I have not been able to take it up, we'll take it up next time, or you can drop us an email if that query requires an immediate answer. Do drop us an email at support@weekendinvesting.com. Do also see all the previous rounds. Most likely, all queries have been resolved before as well. And thank you so much for watching. You can watch the previous episodes here. And do like and share these videos. Do subscribe to the channel. And I wish you a great weekend. Bye bye.